first on my list, and let me start off with a Kaynes Tech. Kaynes Tech, thumbs down. I mean, this is an example, another example of a solid company which is not meeting estimates, and that's why you're going to see the pain. Revenue up 30% at 661 crores, EBITDA up 35% odd, and margins at 14.2% versus 13.7%. Net profit was up 47%. So why am I saying that this is thumbs down? Well, this is because look at what was expected. The revenue growth was expected to be 56%. They've clocked about 30%. Margins have expanded on account of clearance in inventory. And if they need to meet the figure that they have given for this financial year, they need to grow double in Q4, which seems like a tall order. Where has the pain point come from? I mean, we're waiting for the conference call and we'll be speaking with the management later today. But it seems in the face of it that their smart meter inventory is what may be causing this pain for Kaynes Tech. And remember, again, a company that has seen a great run up. We should pull up the year to date for Kaynes Tech if we can, how they performed in the full year. Yesterday, the stock already nearly 7% down. You might see some more pain because the numbers definitely are not what was expected. In the last 1 month, the stock has already seen quite a bit of a beating. Kaynes Tech, my first stock, a thumbs down today. A thumbs up for Oriental Rail though, and railways are going to be in focus this rest of this week, I suppose. You know, just to the point that Neeraj was making on whether we've hit the bottom, maybe you are going to see some pre-budget fervor return in the markets. Maybe I'm being extra hopeful or optimistic, but it seems set for it with what the RBI has also done today. And don't be surprised if there is an up move post-budget as well. If there is, then these are the kind of, you're going to go back to the good old Indian story. Government spends, companies benefit, stock market looks at those cues, and Oriental Rail will be there as well. They have an order from the Indian Railways. Their subsidiary has secured an order of about 575 crores. The contract will be executed within 21 months. Their order book as on September 2024 was 1,854 crores. So that's a thumbs up. Quickly going to go through 361 WAM. Not in a space which has seen the best of times right now, but just on the basis of their numbers quarter on quarter, I'm giving it a thumbs up. Total income up 4.7%. Annual recurring revenue up 7.3%, profits up, net profit up 12.6%, and AUM quarter on quarter up 1.7%. Everyone is suffering. 361 WAM is showing that in its quarterly numbers, but they have also approved the acquisition of Batliwala and Karani Securities India for 1,774 crores. So you might see some relief there coming in for the stock.
You know, that's interesting though, because IIFL Wealth and 361 WAM split, or IIFL and 361 WAM split, different businesses. Now IIFL wants to get into wealth management. 361 WAM wealth manager wants to get into securities and financing.
Everybody wants to do everything.
Yeah, no, but they were the common business which had split, and now both businesses are trying to build out their whole thing. So that's the interesting piece.
It's interesting, and we'll also have to study cost of acquisition of customer, I think, and retention as well, because that's another thing that we should watch out for with those businesses. But completely different industry, and we're talking about Tata Steel at the start. This is a thumbs up. Look at every metric that you measure, right? Revenue is down about 3%, but it's still above the consensus estimates, 53,650 odd crore rupees. The estimate had pegged it at 52,438 crore rupees. The EBITDA is down 5.7%, 5,903 crore, but even this is better than expectations. The margins have come in more or less stable at 11%, significantly above the estimate of 9%, which is the consensus, and net profit is down about 36.4%. Again, better than the expectation, because the expectation was for a loss. Now, caution here is that there was in fact a write-back, a provision write-back of 1,412.89 crore rupees, which has resulted in this net profit, and we're still waiting for clarity on how that has come to pass. The con call will happen later today, and we'll get clarity on that. But we've got a few brokerage notes that have come through on Tata Steel. Morgan Stanley has one. It has maintained its equal weight rating on the stock with a target price of 160. The stock is currently, as you can see, at 126, so considerable upside. It says that the Q3 result was a good show on the domestic front. The standalone EBITDA was 24% above its own estimates, and that was led by lower costs and mainly other OPEX. And the UK business was largely in line, and the Netherlands and the others did better than expected. So certainly something to keep on your radar at the start. Coal India is the second, and this is a neutral rating only because the earnings were better than expectations, but the outlook is a little bit cloudy. We'll talk about that in just a bit. The revenue was down about 1% or so, 35,779 crore rupees, ahead of expectations. EBITDA was lower at 5% lower. This also was better than expectations, and the margin is coming at 34.42%. The estimate was for 32.6%. But what is the issue really here? We're talking about a situation where the offtake was a little bit muted and the production growth came in at 2%, and the overall average realizations per ton are actually down 3.3% on a year-on-year basis. And also the outlook on production is something that people have differing opinions on. Couple of notes coming through. JP Morgan is actually neutral on the stock with a target price of 435. It's saying that the improved e-auction premium is a positive and the production growth concerns need to ease for them to be positive. Jefferies, on the other hand, is maintaining a buy with a target price of 475. It says that the big fall in e-auction prices seems to be behind. So that's certainly a positive. The last one is Indraprastha Gas, which is also a neutral. And because you saw the impact of the pricing issues, the administered price issue in the third quarter, but it might just be that this is the bottom, and that's what a few people are also saying. I'll come to that in a bit. Numbers first. Revenue is up about 1.6%. The EBITDA is down about 32.2%. You saw contraction in the margins, which was anticipated, came in at 9.7% versus 14.5%, and the net profit, therefore, was down about 34%. Citi is maintaining a buy with a target price of 450. It's saying that the Q3 was not as bad as feared, and the partial APM, that is the administered price mechanism restoration, marks the bottom for margins. I would keep this on your radar.
Okay. Thankfully, the RBI moves have been left for me. So I'm banking on the Citi note to mention this because it's arguably one of the most important things today. So I'm glad that just pointing it out to our viewers, keep in mind. So Citi note on RBI moves says this out, right? That it's sentimentally positive for banks with stretched LDRs, so the likes of HDFC Bank, Axis Bank, Bank of Baroda, even a federal bank. So these kind of stand out. And wholesale rates easing off will relatively benefit select NBFCs. Actually, you could argue most of the NBFCs, but the likes of Bajaj Finance for sure. And it's done well, by the way. Kudos to Parag Thakkar, who came on our shows and mentioned those. So therefore, keep an eye out for some of those. KRN heat exchangers, good numbers, but I thought missed a trick on the margins, and therefore don't know if that 9% downtick yesterday will be followed by further, but the revenue number looked very strong, 70% higher. Bottom line, because of other one-offs, also is up 74%, but the margins at 14.2 versus 7.7 versus 17.9 left a bit to be desired. So, I mean, ordinarily, I would suspect that the street will punish the margin performance, but the revenue performance is also very strong. So a bit difficult to say. I would still say on the margins front, because it's such a large fall, a thumbs down. So keep an eye out for KRN heat exchangers. That's number 2. And a thumbs up on Arvind Smart Spaces. Will develop a mega industrial park in Ahmedabad, spread over 440 acres. The top line potential for the park is 1350 crores. Remember, it's a potential, it's not necessarily a given, but I would suspect that today the market may want to latch on to good news. So a bit of a thumbs up for Arvind Smart Spaces. So these are my top 3 guys.